Welcome to the Business Herald Podcast. The Business Herald is a weekly roundup of all of the top UK business news stories by email, social media, and this podcast. The podcast will feature some of the week's main stories, and we'll be joined by various business people on each episode to discuss the week's news and how it might impact a smaller business like yours. And hopefully we'll have some fun on a Friday too. I'm your host, Stephen Mather. I'm a lawyer for SMEs, and I help business owners sleep better at night by sorting their legal problems out. Thanks for listening, and stay tuned for the next episode of the Business Herald. So welcome along to the Budget 2021 special of the Business Herald Podcast. It's episode 27. This week I'm joined by three experts to discuss the budget and how it might affect your small business. Firstly up, Stephen Mugglestone is a qualified chartered accountant. Don't forget the chartered. And business advisor and part of an independent small firm, Michael Harwood & Co. He previously worked for many years with a large multinational firm and went on to be a finance director of a public company and then became self-employed consultant before returning to practice. He now has a portfolio of SME clients and specialises in corporate finance. He's a Leicester City season ticket holder, director and trustee of Leicester Riders Foundation and Arena. Next up is Neil Wattam. Neil is also a qualified chartered accountant. And yes, I know what you're thinking, two accountants and a lawyer. Wow, this will be a fun podcast. So Neil is now also an independent financial advisor and founder of Wattam Kirby Me, a wealth management firm established last year in Leicestershire. And our final guest is James Blacklaws. As a child, James probably wanted to be a defender for Norwich City FC. And if you thought two accountants and a lawyer was going to be boring, wait until you meet James. James is a regular guest on the podcast because of his knowledge of economics and experience with SME clients in his time as a commercial manager at Lloyds Bank and now as a commercial mortgage broker with his own JB Commercial Finance. Welcome along, everybody.
Good afternoon.
This week was obviously the budget. The Chancellor, Rishi Sunak, presented his budget on Wednesday, the 3rd of March, 2021. In his speech, he stated that the budget, quote, meets the moment with a three-part plan to protect the jobs and livelihoods of the British people. And as always with budgets, my opinion, there was smoke and mirrors, give with one hand and take with the other. So, for instance, he told us that the spend on coronavirus has been huge. We all know that. But, of course, neglected to mention the huge spend of 37 billion on the completely useless and pointless track and chase app that was never used. That's $1 billion more than we usually spend on defence spending, by the way. He claimed that tax is not rising and no one will pay more tax. But with the freezing of tax bands, it adds somewhere between £5 and £9 billion in extra tax each year from individual taxpayers only over the next 5 years. And so I've put a full and detailed list of all the main budget points in this week's Business Herald newsletter, which if you're not signed up for, you should do at businessherald.co.uk. But the first question to you guys is, how was it for you? Steve, I'll come to you first. What's your overall picture and view of the budget? How was it?
I think I probably concur with you. It was a lot of smoke and mirrors. I think it's a jigsaw puzzle. There's more to come. It's clearly trying to focus on business and promote investment this year into next year. Throw out the corporation tax rises in the future. But obviously the Conservative Party in the manifesto said they wouldn't touch income tax, VAT, national insurance, which is 50% of all taxes. So it only leaves inheritance tax, capital gains tax, duties and corporation tax to go with. But I think on the grounds that it's about trying to promote business and boost the economy, it's only phase one to see what happens. But later this year and next year, there'll be other announcements and other changes. The other taxes will be addressed. And in particular, there is later this month, they call it Tax Day, is where they start consultation and disclosing all the other things that will be coming down the line. So, I think it's this part of a jigsaw puzzle. We just got to work out what the picture looks like.
Yeah, absolutely. I've just been reminded of the film. I think it's called The Prestige, which is about magicians. And The Prestige in a magic show, as I understand it, is is the bit where you're not looking over here, you're looking over here, and this is where we do the actual magic over here, right? And that's pretty much what I think has happened. So they've set down, look, everyone's going to have to pay more tax, and we all know it, and that's been leaked, and there's been news articles over the last couple of months about it, and everyone is almost resigned to the fact that, look, we know we're going to have to pay more tax. He announces the increases for corporation tax, but that's deferred, not looking at it. But it's the things almost that he didn't announce at the budget that, like you say, that's still game for them. And one of the things that we found, and I think with this particular government, but perhaps just politics more recently, is that it always used to be the case that budget day was the day for announcing everything. This is where, all the new policies and new taxes came in. This is where it was all announced. But like you say, now they'll do that whenever they want, at whatever point in time they want. So now the budget is for him putting across his nice glitzy, glossy, pre-budget statement video that they spent money on, and making a statement so that people hear what he wants them to hear. All the changes come at a later date. The phrase that is used by lots of commentators is that the devil is in the detail with the budget. And what they really mean is we've not really found out what they're up to. Yeah, something's going to come later on in the line. And then once we find out that's where we'll all be hit and damaged. James, what do you think? How was the budget for you?
Well, I think as you've both alluded to so far, I mean, we've got a Chancellor at the moment who's very aware of his public image and very aware of the way he's perceived, and certainly that's come across in his presentation of the budget, which has been which has been generally well received by the public, I think, and by the media, and has presented as a bit of a big success. But the phrase I've used, and we've joked about it several times on this podcast, it continues to kick the can down the road. We have an extension of the furlough scheme till the end of September, which feels too long to me. We've got further loan schemes that have been announced, which is my sort of area of expertise, obviously, which, again, are going to push more debt onto small businesses. And the stamp duty threshold, obviously, is going to continue to stay where it is, or not stay where it is, for another period of time. It feels like we're just pushing more and more back. And there's a lot of rumours that there'll be a general election next year now, with Boris Johnson's looking to scrap the fixed-term parliaments. And I can't help feel that, again, by delaying this increase in corporation tax in full till 2020, was it 2023, was it? It just feels like we're just pushing and pushing away problems which are going to engulf this economy, personally speaking. So we'll wait and see. And as always, the devil's in the detail. Speaking about it from a personal point of view and what impacts my business and my clients, the new government loan scheme, the recovery loan scheme, is going to be very interesting to see how that works. It feels like it's a little bit of a combination of the current Civils loan scheme plus the old historic banks EFG scheme, God bless it, which caused a lot of headaches for guys like me over the last sort of 10, 15 years. It feels like it's somewhere in the middle, but the key thing will be who actually administers this scheme, because the banks have to be on side with it and they have to have the processes in place to actually deliver it. I'm not convinced that's the case at the moment. So we've got 4 weeks to sort it out effectively. So from a personal point of view, it's a wait and see situation. From a wider point of view, I can see why it's been positively received. I do think, though, that we are storing more difficulty for later down the line.
Neil, what was your overall view of the budget?
Probably echoing some of the points these guys have already made to a large degree. I mean, it's good to see there wasn't anything, in terms of looking after personal client stat. There's nothing too excessive. There's no major changes from a personal perspective. There's more tweaks, and perhaps some people call them stealth changes, like in terms of the allowance freezes, etc. But arguably they're a little bit more manageable, rather than here we've scrapped this or we've completely halved that, or some more drastic thing that might have been dreamt up. So I guess from that perspective, that's kind of welcome. As a business owner, one that's got ambitions, the corporation tax rises are less attractive, clearly, but equally accept that we've got to do our part to try and help. So I guess, yeah, to a degree, agree with James of is this enough yet? Probably not, but equally they don't want to scare everyone off. So, want businesses to invest, to grow, to employ. So I think it was reasonable, is my take. But I guess, as Stephen sort of alluded, there might be some more to come in very short order, maybe. But I think for now it is a reasonable first step.
One of the things that I talked about on the podcast last week, which I'm sure you all listened to, of course, was actually I think that the increase of corporation tax is a bad idea. It negatively affects when we're talking about wanting to create an economy where businesses are investing in their business. Increasing corporation tax means that they can't, because all of a sudden an extra 5-6% has just been taken away from them in terms of what they can add in. Now, there's some good news in the budget with some of the capital allowances. That's a bit technical, but the super deduction plan that they've proposed, which is 130% write down, looks like that's a good idea, and that will encourage businesses in the next 18 months. I think it's 18 months, maybe 2 years, of actually investing in plant and machinery. That's a good idea, but the overarching question for me was, there's always complaints aimed at these big organisations where they're rediverting profits and money overseas. They're based in Ireland, they're based in the Netherlands, and how do we compete with that? And Rishi's answer was, well, we'll increase tax because it still makes us the lowest in the G7, lowest corporation tax in the G7. It's like, yeah, but when the G7 is nothing. It's just an entity that's put together. We're in Europe, and it doesn't make us the lowest in Europe. So if we want people to go, actually, the UK is a great place to invest, then we should do it. And look at Ireland as an example. I think it's 12.5% corporation tax there, with all the reliefs, etc., on investments that companies have there as well. And for me, the increasing of the corporation tax was just it's saying one thing and doing the other. Saying that we want businesses to invest, but actually then doing the other, which is contrary to that. And there's the report in today's Times says this, and it's just reporting upon what the Office for Budget Responsibility says, which is there is an impact on increasing the corporation tax to 25% because businesses will leave, corporations will leave. But as we know with all of this stuff, it's always the big boys that leave, the big boys that can afford to go and relocate and base in Ireland, and then us guys, small medium enterprises that can't do that don't have that ability to have that kind of planning in place. We get lumbered with all the extra tax liability. So yeah, I think Neil, you mentioned that the word stealth taxes, and it's exactly what it is. The freezing of personal allowances is a stealth tax. It's going to add, the budget clearly says it's going to add an extra between £5 and £9 billion a year into the coffers. But then he says no one will pay more tax. Well, yeah, they will. And even and I've never not seen this mentioned, but even the increase to the living wage, £8.91, I think, puts more people paying more tax because of the freezing of the tax thresholds. So to say that no one will pay more tax is just pure spin and lies. James, I can see you nodding away.
Yeah, I mean, as we've alluded to here, it's about how you word things, and he's correct in saying that people won't pay more tax, but they will because they're earning more money. So by freezing the tax allowance, it's a form of taxation through inflation, really, isn't it? And with an inflation limit, we anticipate inflation going up. Well, of course, that means that people are going to pay more tax, albeit not directly. So yeah, it's all views a term. At least two people have used the term smoke and mirrors, and that's exactly what it is. And it's slightly disingenuous, really, on one hand, to say, we're going to get the tax money in, but actually you're not going to be paying for it. About the businesses, though, clearly, I think anyone with any common sense would agree with what you've just said there, Stephen, and that the figures that I believe the Chancellor said was that the increase in corporation tax, I'm paraphrasing slightly here, I think it's going to be worth about 17 billion a year extra. Well, that's cloud cuckoo land, because if you can afford the best lawyers, the best accountants, you're not going to be paying a penny extra tax, I would imagine. So the big companies are still going to pay no tax. And it'll be those squeezed employers who are earning £500,000 to £5 million profit who actually provide this additional taxation money. And they're the ones we need to encourage to employ new layers of staff, new people, enterprise, new products. And they're the ones that are going to feel the burden of an extra 6% corporation tax. So it feels a little bit headline, which is nice. We're going to tax big business, but actually you and I both know that ultimately the people who pay for this are probably going to be those nice businesses who are employing 100, 200 people, actually, who are going to be had the difference made to them rather than the big multinationals.
And of course, the other thing that it's one of those phrases that sounds good to people that have no idea about how running a business works, because to them, looking at their tax and they're saying, they might be, just tipping into a higher rate taxpayer, 50 grand a year, they're doing all right, and their tax level's 40%, and they're going, how can you have a company and only pay 19%? That's not fair. Completely failing to realize that 19% is just a company tax, and then you've got to take the money out to pay yourself somehow. And that's either by salary, and therefore you're going to be taxed at that level, or by dividends, and you're going to be taxed at a suitable, similar kind of level as an overall kind of net picture. And so it's one of those things that, in playing to the lowest common denominator, almost say that we're going to tax the big boys, looks kind of good. You get the support of all those people that go, yeah, quite right, they should pay money. They're earning all that money, they should pay it. But actually, the Joe Bloggs, as it were, that owns a company, that runs a company that is employing people, the backbone of the UK economy being small businesses, they're the ones that suffer. Steve, I guess you'll have plenty of clients over the course of the next year trying to work out how they can get their company corporation profits to less than £50,000 being the new level.
That's the difficult one, because we've had the small rate and the marginal rate before. And what it actually means is, the up to 50,000 stick within the 19%, but then the in-between bit between the small rate and the full fat 25% is actually at a higher rate, because it's sliding up to get to that 25%. So the bit in the middle, you can be taxed at 26.5%. So again, you refer to the stealth idea, and that's exactly what's happening there. It's okay, small company, less than 50 grand, nothing changes. But if you make 75 grand, 100 grand, 150 grand, you are going to be taxed at a higher rate.
Quite a bit more, actually, and it adds up. But the other thing that I thought about, and I haven't fully worked through this argument at all, or looked at any of the figures, but with the changes in, and I don't want to get too technical on this call, but with the changes in the IR35 off payroll workers, a lot of those companies where they're on £50,000 profit anyway are quite likely to be contractors that are going to be caught by that anyway. And so I'm almost sensed, of course, there's some small businesses that, where they might be doing 50 grand and, and that's it. But there's a lot of those businesses at that level that are probably going to fall foul of the contractor rules anyway. And the government clearly wants to move them to being employees anyway. So again, it almost felt like don't worry if you're a small, if you're a small company, you're only making 50 grand a year or less. We're going to keep you at 19%. But the reality of it is, it's like, we're not going to keep you at that. We're going to move you across to being an employee, and we're going to charge you 45% or 40%. So yeah, I think what I'm finding interesting is this. Like, I've I watch the budget. I've watched the budget every year that I can remember since being an adult because I'm a geek like that, and nothing much changes. But no one ever talks about it. No one ever says what I'm saying now. All the press and the news, they just report upon it factually. But I never see anybody really saying like what I'm saying now, which is it's smoke and mirrors. And I'm glad that I now have an opportunity, and you guys have an opportunity, and the public has a bit of an opportunity in doing this kind of thing to say, hang on a minute, we know what you're up to. we know what you're up to. Yeah, go on then.
On that, I mean, we've been sitting, as you mentioned earlier, we're a relatively new business, but we've got decent aspirations, and we've sat down doing our 5-10 longer period planning, and this has an effect. We started business, had a really good start, and those aspirations would mean that we are in the position of paying more corporation tax. Don't mind paying tax, happy to pay the tax that's appropriate, but this has an effect, and I don't know what that is quite yet, but nonetheless, it will do something. Whether that scales back our aspirations, maybe not, but it might affect how we get there and what we do to get there. So, it's whether Rishi thought of what we might do as an impact, probably not. But as you said, the IR35 will undoubtedly mean there are less corporations technically out there paying that potential 25% tax.
Yeah. Steve, what do you think?
Well, it's worth sort of reminding everybody that, yes, the big incentives in the budget are about investment and capital allowances and research and development and all the advancements there, which obviously massive improvements to manufacturing and businesses. But our economy is 80% service business. So, a service company isn't going to apart from having perhaps an electric car, things like that, there is very little else for those kind of incentives there. The service businesses that make profits, that are growing, they're going to be paying higher tax. It's as simple as that.
It's basically only Apple that benefit from that in the service industry, because we all just go, well, we'll buy a new Apple MacBook Pro. It's the only place we're going to spend our money. We might as well get the top one and go for it. He's giving us some allowances for it. It's fine. James, you talked about the extension of furlough, and that's until September, which is obviously beyond the June July roadmap date. And they've obviously covered that off by saying, well, look, we're here to protect jobs and make sure, jobs are safe. My view on it was that the furlough scheme has been absolutely fantastic. It's cost us an absolute fortune, and loads more than any other European country scheme has. But it has been great. But I have two major concerns, and it's number one is this: people that have been on furlough for effectively a year now are going to find it incredibly difficult to get back into the workplace. And I say that not to have a go or a dig. That's not their fault necessarily that they've been on furlough. But I know from my job side of things, in dealing with people that are on long-term sick leave, of actually getting someone back into the workplace when they've had a year out is really difficult. Because no offense to the people that are furloughed at the moment, but they're used to kind of not getting up at 6 o'clock in the morning. They're used to getting up at 8 or 9 o'clock in the morning and then kind of doing what they want and that kind of thing. And it's difficult to get back into the regime of work. So that was number one. It's difficult for people to get back into work. And number two is that there's still something like 4 million people that are on the furlough scheme. Now, while many of those are in hospitality and those kind of industries that are closed, and therefore they will have jobs to go back to, there's an inevitability that there's people that are furloughed at the moment that don't have a job to go back to. And my concern is that there's employers, particularly smaller employers, looking at looking at going, we don't need this person anymore. We don't need these people anymore. But not necessarily being able to afford the redundancy pay, because if you've employed somebody for more than a few years, the redundancy pay is going to be a few £1,000s upwards, maybe up to £15,000. And to take that hit on, you might have a couple of employees that you're looking at making redundant. that is a big hit, and that's going to be a real difficult one. So we talked about on the podcast, kicking the can down the road, all of the things that have been put in place to help businesses can also be a hinder to them. And I can envisage a situation where lots of businesses are going to get to the point going, we need to make redundancies, we just can't afford it. And I was kind of half hoping that the Chancellor would announce something like that, a little bit pessimistic, so I can understand why he didn't. But James, what do you think?
I think you're absolutely right. Like the furlough scheme was an absolute lifesaver for a lot of small businesses when it was first introduced. And I don't think there's any doubt that initially a scheme like that was very innovative, it was very interesting, and it was very successful. But the fact now that you can have someone who, by the end of September, will have been on a formal furlough for the thick end of 18 months does feel slightly farcical. If a business, no matter what's happened, it can function without that person, then they're probably not going to want them back in September. So I do envisage a considerable amount of redundancies in that time. I don't think there's any doubt about that. We're going to see a spike in Q4 this year. With regard to getting people back to work, well, clearly there's a relatively set pattern for that, because we have a lot of people take 12 months maternity leave at this moment in time. And we don't usually sort of have the same conversation when it comes to ladies coming back after 12-month maternity leave. So it's something that's been tackled by business in the past. So my advice to businesses would make sure you've got your risk assessment straight. So anyone who's struggling to come back from work, who's suffering from mental health issues, struggling from the complexity of coming back and balancing it with a new family life and new added complications, make sure you cover yourself as a small business, that you treat these people correctly, fairly, and document everything. I can see there being lots of phased returns. I can see people coming back on a part-time basis with a view to coming back full-time down the line. And I think there'll be a lot more flexible working. So if you don't need necessarily a full-time member of staff now, we talked about hospitality. A lot of pubs, unfortunately, are shutting down freeholds, or they're reducing the amount of leasehold properties they've got, whatever it may be. This kind of employment might not be available, but reduced hours maybe. So they may come back on 0-hour contracts, etc. So I think there'll be more flexibility in the workplace, but I think that the short-term issue for the economy is going to be those 4 million people, as you correctly say, are still on a form of furlough, because I'd be very, very doubtful that more than half those jobs will be waiting for them when they actually come back. And that's a major concern for UK PLC.
Yeah, and what do we do about that? That's the thing. It's like, economy goes up. I mean, in the budget, actually, he announced, the expectation of unemployment previously was going to be that 11.9% of people would be unemployed. That's dropped down, and they think the worst case scenario is going to top out about 7%, I think, next year. So that they anticipate that it is going to be better than what they first thought. But it still seems to me like what is potentially missing here, and the key to this is getting those people back into the job market. Now, there's a great scheme with the kind of the apprenticeship scheme for I think it's under 24s. If you're on universal credit, the employer's now going to get, according to Rishi, they're going to get £3,000 to take on apprenticeships, which is a really good incentive, actually.
Yeah,
that is, for many smaller businesses, that's a good incentive. But there needs to be more, and the whole. Do you remember the middle of last year where the government got scolded for putting out an advert that had a ballerina, I think it was, and said that she might need to train into cyber or something like that. And they got ridiculed for that ad. But the fact what that was trying to show and demonstrate is that actually, just because you've been doing job X, for the last couple of years, doesn't mean that you can't do job Y. But there needs to be some funding and training put in place to allow people to change, if you ask me. Steve, there was some good things that came out in the budget, but they all seem to be aimed at people with like previous grants aimed at people with property. So there's some restart grants available if you've got property, £6,000, £18,000 if you've got a gym of a certain size. Was it? When we've gone from a position where we've had 4 million people in the UK that's been quote excluded, hashtag excluded UK, is just providing grants to people that have property still missing out the people that don't have property, the people that are running a business that actually could still do with some restart help, but missing them out. Do you think that's a missed opportunity there?
Yes. I mean, on that excluded number, I think there was probably something like 600,000 self-employed people that were newly self-employed that are now part of the SEI, the self-employment grant scheme, because they filed a tax return in January. But there's still something like 2.5 million that are the director, shareholder, that are still classed as excluded, that are not. They don't have a property, they don't pay rates, business rates. So there is still very little. And I think if you read social media and whatever, there's been quite a concerted campaign, but I think the government have put the fingers in their ears about it still.
Yeah, absolutely. Yeah, I absolutely. So 2 points there. So what I find quite funny about so they say 600,000 more people are going to be able to claim the self-employed, the SEISS scheme on the fourth and fifth payments, 80% of your profits, because you'll have filed a tax return last year. Like, well, great. If you're a new business last year, and you were struggling because of the coronavirus impact, like 80% of diddly squat is not much. So, like, that's almost kind of saying, here's some bread and water and go and live on that. It's not much for many people that have really struggled. Yeah, definitely. And I think you're right. The government has. I had on the podcast last week. One of the specials I did was Paul Scully MP, is the MP responsible for small businesses, and I asked him the question about cracking the gaps appearing, and he's basically his answer was. It's inevitable that there's going to be gaps because we rolled everything out so quickly, and it was so innovative and good, and we just had to use what we had to use, which was the systems that were in place. So we could do it on furlough because we had PAYE data. We could do it on self-employed because we had tax return data, and almost like, well, there are gaps in between, and I don't really understand that line of thinking, because it's specifically just excluding directors taking drawings, because they could easily demonstrate from their personal tax returns how much they had, and if they don't have that anymore, then great. The flip side of all of that is I've seen a lot of criticism of self-employed people that are getting their 80% grant and still working, because there doesn't appear to be any any kind of stop on that. Although one thing that I did note that was mentioned in the budget is Rishi announcing 1,000 new jobs at HMRC to do a crackdown on fraud. And James, we've talked about that in the past on like bounce back loan type fraud and furlough fraud. That's talk of the kind of the smoking. That's where they're going to get them a lot of money back, isn't it? By kind of attacking the people that have claimed inadvertently, incorrectly, or purposely incorrectly.
Yeah, absolutely. I mean, the figure of 100 million to actually chase fraud has been announced, and we don't know at this stage how that will be distributed, whether it will be predominantly focused on furlough, on grants, or by some of the bounce back loan schemes frauds, because the figures are quite phenomenal involved in this, and I dare say they run well into the billions. And you're absolutely right. That's going to be a constant source of income for the government for the next 5 years, I would imagine, investigating fraud. Of course, if they'd been able to put correct systems in place in the first place, it probably wouldn't be such an issue. But that's probably another conversation for another day. But certainly that's going to be a way of chasing this deficit. It's sort of posthumously sort of claiming it, if you like, really, after it's actually been released in the first place, and issuing the relevant fines. So they obviously can't go and mention that in the budget as an income, because it will be revealing it wasn't done correctly in the first place. But I don't think there's any doubt it will add billions of pounds to HMRC's coffers each year for the next few years. Yeah.
Yeah. Steve, do you see that as being a bit of an issue for businesses moving forward over the next 12, 18, 24 months?
Yeah, it's the task force has identified the first number is 3.5 billion of COVID-related fraud. So it is quite a big number. And yes, you do hear that people are working, self-employed, and claiming the grant. The issue that the government did with particularly the self-employed grant is that it was it missed out the accountant. It really was the individual straight to HMRC, which HMRC wanted to do. Some of our clients were on the phone and asked us to check calculations, etc. But very much it was a direct relationship between the self-employed and the government without the agents in between. And there lies possibly some of the issues that are coming about. But yeah, there is a big number out there, but equally there was a big number of excluded as well, which doesn't, two wrongs don't make a right, but it is quite remarkable that one part of the coin would miss out 2.5 to 3 million people, and equally there is potentially £3.5 billion of fraud out there.
Yeah, absolutely. One of the other things that has been picked up today, it's on the BBC actually, which is surprising for them to be actual journalists. But one other thing that they've picked up is the announcement. There was an announcement last year, a scheme for green homes, a 1.5 billion pound scheme to allow homeowners to invest in insulating their loft and putting in heat source pumps, that kind of thing. 1.5 billion. The scheme runs out in March, the end of this month. Chancellor didn't extend it, and apparently only 6% of the cash has been handed out. So it's one of those schemes that, when announced, sounds brilliant, like fantastic. 1.5 billion into green projects, amazing. The reality is a lot different. And so in the budget they announced this new infrastructure bank that's going to be operated out of Leeds, I think he said. It's going to be capitalised. It's looking at lending £40 billion, mainly in green projects. Neil, I know that you're not necessarily an expert in green project funding at all, but do you see that this is perhaps just one of those things that, again, sounds good, but the reality will be different?
Fear that's the case. I mean, and on that point, into the personal green side, it certainly caught my attention when it was announced, but it did seem that it was just a bit too hard. And yeah, if you make things easy and simple, I don't know, go down to B&Q and you'll get something for free for insulation or something. Something simple. People will do it. I've got to fill in some forms. I've got to go through some hoops. Oh, it's a bit hard.
Yeah, use approved contractors that are in Worcester or something like that.
Yeah.
There's no one local. They'll come out and do this, that, and the other. And yeah, it's not an easy scheme. And those schemes ran in the past about different things have inevitably been cheaper to buy it yourself rather than go through the scheme, because the contractors go, oh, you want your house insulating? Yeah, it's £12,000 when it's normally £2,000 because they're getting funded from the government.
Yeah, I guess, for me, if rather than perhaps doing it that way, if you can do some effectively broader infrastructure, as in government push, government funded, as this is, I don't know, more wind turbines, just whatever. But, proactive, as opposed to essentially sitting back and going, hey, there's some money here. And it doesn't get claimed.
Yeah. So there we go. That's our view on the budget. I think safe to say the summary of it all is that there is some smoke and mirrors happening. There's a little bit of kicking the can down the road. If I could think of another cliche to add in, I'd add that in as well, but I can't off the top of my head. But the reality of it is they've drip fed, spoon fed, and drip fed as the almost promise of increased taxes. The reality of it is that's coming. It's just not so in your face as the top line of income tax VAT isn't changing, but everything else will change. Everything else will shift. One of the things, like obviously he didn't mention, but Keir Starmer mentioned, like council tax rises. The government have approved council tax rises, and it's like the biggest rises that we're going to see, of the last 10 years, and that impacts people's money that they've got at the end of the day. So yeah, overall, we'll see how it all pans out. Guys, was there any? Did anything else happen this week? Because everything, as far as I can see, was just about the budget. Has there been any other news stories, business or otherwise, that kind of caught your eye, caught your attention, that you thought would be worthwhile talking about? Or should I just build in that silence?
There's only been one gig in town, hasn't there, this week? Really, let's face it.
Well, that and conveniently, on the day where everyone's attention is looking at the budget, Nicola Sturgeon being interviewed and cross-examined up in Scotland about her involvement over the Alex Salmond debacle. But that kind of went under the radar, I think, for most people because it's budget day. Interestingly, it seems like she's going to be able to survive and not have to resign. And quite clearly, she should have to resign. That's my publicly stated opinion here on the Business Herald podcast, and so sue me. Guys, thank you very much for joining me on this week's podcast. It's been good to go through some of the detail about the budget. As I said, for the people that are listening at home, I put in the weekly email free newsletter that I send out each Friday. All of the details from the budget, which I took completely and wholly without permission from Mr. Mugglestone's firm's website, Michael Harwood. It's got a very good guide on all of the budget stuff on there, so it's pretty much robbed from there. And very useful information on it. So if you don't subscribe to that email, check that out, www.businessherald.co.uk. Meanwhile, thank you very much for listening. Stay tuned for next week's episode, which will come out on Friday. Thanks very much. Goodbye. That, James, what have you got in your sandwich, mate?
Just cheese, grated cheese.
Just grated cheese. No brown sauce with that. You animal. Why would somebody just have grated cheese?
Grated cheese, a little bit of butter.
Unbelievable.
I've got a McDonald's on the way, if that helps.
Yeah.
What have you ordered?
Well, my kids, because they're going back to school, they're coming in to see The Office because they've not seen it yet. So there's an order of Happy Meals and the like. So yeah. So
you haven't got a Happy Meal, have you?
I've had 2 Happy. No, I haven't.
I normally do 6 Happy Meals. It's the only way to keep me happy.